Nigeria is going through an economic crisis, which has now impacted investor confidence in the economy. It was not surprising, therefore, that Afrinvest chose the title Searching for Investor Confidence for its 2016 banking report launch. A panel of seasoned financial experts, economists, and corporate leaders discuss what needs to be done in the face of the challenges Nigeria is facing, particularly the economic recession.
The real challenge is a challenge of leadership. But I think that ultimately, governments in Nigeria recognize that we should play to the best sustainable interest of the economy. However, building consensus should really be part of the political process. And I think that challenge of building consensus is what politics is about. Everybody wouldn't agree as to how to do things. We need strong institutions, not strong men. Because when we get strong men, we just keep going around in circles responding to the strong men. But very importantly, we need robust public conversation, and the electoral process should be able to, through that robust public conversation, establish certain ways of doing things. I don't think that today anybody should be in doubt that if we had recognized the importance of investment, and when we talk about foreign investors, we're saying the same thing for domestic investors, local investors. The same conditions are necessary to make them invest. So if we don't create those conditions, if we run with, say, what we ran with last year, we're going to be in serious trouble.
The most important lesson for this moment is that it had been wrong all along to depend on export income and portfolio inflows to the exclusion of other types of capital inflows. The success in telecoms, which is entirely attributable, one, to government opening up the access for investors, two, investors resoundingly responding to meet demand, should inspire Nigeria to think of replicating that in other infrastructure sectors where government still retains monopoly. I'm thinking about rail, I'm thinking about power transmission, I'm thinking about gas or oil pipelines. So you could also attract greenfield foreign direct investors. Yes, you should regain the confidence of portfolio investors. I'm not saying don't, but I'm saying broaden your focus, right, so that we don't end up in this kind of situation again in the future.
Everybody talks about a blueprint. We talk about a master plan.
Yeah.
I think what we need is actually a story. Because blueprint and master plan are very complex documents that are understood by few. But when you tell a national story that tells you about where you are and where you are going as a country, and a secondary school student can tell the same story as a professor, what you get is the force of an entire country behind a single story. That is lacking today. We must craft a national story that we can tell, not just through the media, not just through financial media, but across board. If we move away from the macro issues and the larger economic issues and we move further to the issues around monetary policy and fiscal policy, I think we have a problem when we take data at the highest level and we say we are in a recession. I think to deal with the problem we have, we must always dig deeper to the next level. So today, there are three sectors that are most impacted by the famous recession. It is oil and gas, it is financial services, and it is industry. And interestingly, all three goes back to exactly the same problem. We have a problem with earnings from oil because both the price and quantity has gone down, and because of that, we do not have the FX to fund the manufacturing sector, and because of that, the financial services has also essentially not able to lend more, because if you look at the monetary policy that we've taken to deal with the consequences of the oil and gas inflation, it has impacted. So you can't just take recession and then put in place policy to deal with recession in a manner. You must understand that there are certain sectors that are functioning very well, and therefore they should be treated differently. we do need to attract investors. We need them to be confident, first and foremost, that our story is realistic and sustainable. We need them to believe that we will stand by that story, that not every 4 years we'll come back, set aside the journey, spend a year going in the wrong direction, and then go back to the same story. And my final comment is that we want to play in the global economy. It's a decision. We are not compelled to be in the global economy. But once we choose to play, there are rules. Those rules are not negotiable. You don't wake up one day and you play by the rule and then you alter the rules tomorrow. What you must do is to decide what aspect of those rules you are going to play by and to let it be known that when it comes to this particular part, I will play by these rules. But when it comes to these other ones, I'm not yet ready. So I'm not insisting that we must open up to our market, but whatever we choose to do, we must announce it, we must clarify it, and we must stand by it. So the market will not bend to our rules.
To get Nigerian investors back into Nigeria, investing in Nigeria, needs just for the body language of Abuja to change, That is the advantage of having a strong man. Because if the body language is negative and investor unfriendly, then Nigerians will move out in droves, which underscores Suleiman's point that while we may see $20 billion of inflows from Nigerians in diaspora, we may see $40 billion of outflows from Nigerians in Lagos. So we need that body language to change and become investor friendly.
Nothing happens without leadership. And therefore, I think that our biggest deficit in the country today is leadership and the quality of it. Because everything that we've said here today and everything that has been said in the last 5, 10, 15, 30 years will only happen if we have the appropriate leadership to coordinate, to lead, and to ensure that we arrive. See, a vision is useless if it's not executed. And even the framework and everything we said here is very important, but we need the elements of leadership that we need to make it happen. And I think that is where we may need a deeper national dialogue to really talk about this. But very, very, very clearly, if we don't have the right kind of leadership that coordinates, that builds consensus, that understands, and that empathizes, and that can inspire, nothing we've said here today would change the national situation.
Presenting the 2016 banking report, Mr. Ike Choke, CEO of Afrinvest, shared some of the critical issues that shaped the performance of the Nigerian banks.
From a valuation perspective, we see that all these issues facing the economy have itself translated into challenges for the banks. And Nigerian banks are relatively undervalued compared to sub-Saharan African banks. You can see from a PE multiple basis, Nigerian banks are trading at 4.2 times price to earnings multiple, while South Africa is 10 times, Kenya 7 times, Ghana similar 7 times, and Egypt at 5.7 times. Clearly underscoring the challenges we face. On a price to book basis, we are still even at about half the multiple for similar sub-Saharan African markets. So clearly underscores the issues that our economy is faced with and why valuations are quite depressed. And with valuations depressed and a recent devaluation, you would expect that investors will flood in and pick up assets cheaply, but that is yet to happen. Again, underscoring some of the structural issues the economy might be facing. In terms of a market return, this is the return profile of the banking sector in 2015. No bank turned a profit. So if you bought any banking stock in 2015, the least loss you had was perhaps ETI at minus 3.6%, although WEMA showed positive at 4.2%. But pretty much all the banks were in negative territory for the year.
The highlight of the event was the formal launch of the report by the Emir of Kano, His Royal Highness Mohammed Lamido Sanusi, former Central Bank Governor of Nigeria, alongside other dignitaries.
Ike has already presented a summary of what this report contains, and this is the Afrinvest Searching for Investor Confidence report, which is the Nigerian banking sector report, which I commend to you for your reading. It's hereby unveiled.
Mr. Ikechoke speaks further on the banking sector report.
Things have worsened from 2014 to 2015. We have not seen an expansion in risk assets, for instance. It's just kind of remained marginally flat. Although revenues seem to have grown by around 11-12%, when you look at the profit side, it's actually shrunk by 28, almost 30%. So those are worrying signs. Now, the industry ended the year 2015 at 5% non-performing loan threshold, just at the regulatory benchmark. As we stand now, industry NPLs are 11%. So those are worrying signals. And so that underscores the broader issue that the economy is facing. Because as soon as the economy is feeling bad and confidence has left the system, just like we're talking about investor confidence, people don't go out as much as they used to. They don't go to restaurants, they don't go to bars. And so suddenly a hotel someone has taken a facility to build a hotel, but people are not coming to stay in the rooms anymore or eat in the restaurants. Clearly, the cash coming from the building and that business is not as strong as was projected. And suddenly, the loan that was taken to build that hotel is now underperforming. So now and therefore, what can we do? We need to re-stimulate the economy. Once you re-stimulate the economy, that cash starts coming back into the economy. Things get more buoyant. There's more velocity of money moving around. And suddenly, the same company you're saying is non-performing, suddenly finds there's increased cash flows and it immediately begins to service his loans. And once it services those loans, then the industry everybody floats again because the tide is rising. And what we're trying to do is that rather than focus on individual banks, let's look at the bigger picture of the economy and try and focus on fixing that economy and get that tide flowing and get that tide rising for all of us.
A major takeaway is that with the recession, the fiscal authorities must come clear with the policy direction that will galvanize economic activities, restore investor confidence, and support the monetary policy efforts in the country.